Thank you for joining me again for the Providence outlook on investment markets for the quarter. Over the last quarter, we've seen equity markets continue to perform quite strongly, with the international market up around 2.6%. The Australian market has lagged somewhat, up 0.6% during the quarter. We believe that we're starting to enter an inflection point in regards to the inflation outlook. We are seeing synchronised global growth, the first time since 2007. In fact, global leading indicators are picking up, particularly in the States. The Australian economy, however, looks vulnerable in our view due to high household debt. This could lead to a shock within the economy if there's a downturn in housing. We will be watching this very closely. We are already seeing some downturn in retail sales. So we believe that we're entering a distinct risk period. Diversification, quality of assets, relative value, and an overweighting to cash is paramount in our view. Given that it is the 30th anniversary since the 1987 crash and 10 years since the GFC, we thought it was opportune to share some of our views and insights of living through those periods of time. In 1987, the equity market fell overnight 25%. In 2007 and 8 in the GFC, from peak to trough, the market fell some 54%. So what did that teach us? One thing that doesn't change is human greed. The parallels to today is worthwhile considering. Asset values have risen very strongly. Debt is still very high. Complacency is evident. We are starting to see interest rates tick up, as indicated by central banks. There is a high degree of speculation, as can be seen in the trading of Bitcoin or cryptocurrencies. There are complex structures starting to make their way into the markets, and there is herd behaviour of the fear of missing out. So do we see similar behaviour? Yes. Could it continue? Yes, it can. Is it time for caution? We believe so. And have the lessons been learnt? No. Within asset classes, we have seen equities continue to perform well across the globe, driven by higher corporate earnings and strong global growth. Australia, however, has lagged international comparisons. The US looks very expensive in our view, despite the strong growth, and we prefer European and Japanese equity markets at the margin. We still maintain a slightly overweight to international equities. Within property, we continue to see international fund flow into our market, compressing yields and cap rates to levels that we believe are unsustainable. Within direct property, we prefer boutique sectors like medical centres, student accommodation, and hotels. Within the REITs, the market has consolidated after the entry to Amazon into retail, which has seen valuations of retail REITs reduce substantially. We believe that de-rating is now largely over. Within fixed interest, credit spreads have continued to contract, and there's little expectation of a rise in defaults rates. In that sector, we are increasing the credit quality in the credit sector. We have taken a slight weighting to Australian government bonds given our concerns of the outlook for the Australian economy. Within alternatives, we continue to increase our exposure, looking for diversification and non-correlated assets to equity and property markets. We believe that this will give portfolios some protection in a downturn. In summary, we believe times are a-changing. Central banks around the globe have indicated their intention to tighten monetary policy. Global growth is synchronised and the leading indicators are quite strong. We believe, therefore, we'll start seeing the signs of inflation creeping back into the system. And this is a time when there's extended global debt and extended valuations. Therefore, We believe it is still prudent to remain cautious, maintaining a high level of cash, a high level of diversification, and increasing the quality across our portfolio. Recently, I spent 5 days in London catching up with Will Porter, who's been there now for 8 months. Will had a very busy schedule for me, meeting a number of hedge fund managers and family offices. It was great to get their insight. I also spent some time in Ireland, tracing the family footsteps and looking at the port and where the ship Providence sailed from in Cove. I'm pleased to also announce Harry Buckridge joining Providence as a research analyst here in the Sydney office, boosting our research capabilities and supporting the team. I'm also thrilled to announce Bianca is expecting her first child in March. We wish her well. Thanks for joining us again, and we look forward to seeing you at our Christmas function later in December. For a full report of our outlook, please see our website.